This is our Forex blog for August 9th, 2011, and we, like most days, want to buy the strongest pairs versus the weak and sell the weakest versus the strong. You can see the pound really went weak here around 4:30 and stayed weak all day. You want to trade that against one of the pairs that's strong, like the Swiss, strong all day. Daily, weekly, monthly trends up. This one, the daily trend's down. The weekly, monthly trend are up. In the perfect world, the pound would be weak on all time frames like the New Zealand and Australian are. But nonetheless, you want to look to buy sell the weak pound versus the strong Swiss. So let's bring up the pound Swiss, and you can see ever since this trend just pretty much fell. It fell 100, 200, 300, 400, 500 pips. Because you're selling the weakest currency versus the strongest. And normally I'm bringing up range bar charts to showcase this now, but you can pretty much use our IntelliStop code to go short. It got you out of the trade. Short again, small profit, short again, 40 pip profit, short again, couple hundred pip profit, and it still has you short here as we speak. Forgetting the pound, you also have a weak Australian from 3:30 to 5, and also the New Zealand. So the Australian Swiss and New Zealand Swiss also make wonderful shorts. Here's you can see this one went weak, pretty much down. Basically our methods are find the strongest ones and buy them against the weakest ones, and find the weakest ones and sell them against the strongest ones. The New Zealand Swiss also. This fell hundreds and hundreds of pips. What else do we have? We have a relatively weak dollar from 5 to 7. And so which one was strong from 5 to 7? Well, initially the Swiss was strong. So from 5 to about 5:30, there's very likely to be some very nice dollar Swiss sells. So here's some 5 to, or no, what time was it? The Swiss became super strong at 3:30, and the dollar had less strength. In an ideal world, you don't want to buy two strong ones against each other. This one started to go weaker around 4:45. Right here, you can see a nice little flag pattern right here. It's just about to go below the previous day's low, which it wasn't able to break last night, and that's usually good for 20 or 30 pips. Goes right down to the Fibonacci profit target levels, which are really heavy support areas, and that's about a 70 or 80 pip drop. Pretty amazing trade. The yen was mildly weak from about 5:30 to 8:30, and you can trade that against one of the stronger ones. At 5:30, again, the Swiss pretty unbelievably strong last night. It was without a doubt the strongest one. So you want to buy the Swiss yen, especially from about 4:45 onward. And you can see it went from below to above the hourly. That's a good pattern. Got you out of here. You got in here with a small loss in here for about 60 pips. It just absolutely took off. Anytime you buy a breakout too, by the way, up here near the high, draw your fibs on the last wave and use that as an area of getting out. And this one just absolutely flew through there. And this is a perfect example of where I will show an example of our range charts. Bring up the Swiss yen, and I don't know what the volatility on this is, but I'll just use a 8 pips per bar chart. Put this on layer 2, and it has to download tick data, and it's going to then showcase it's going to build 8 pips per bar on here. So when that broke out somewhere around 11:30, notice on a range bar, it's a lot clearer where to get out. If your initial stop when you bought this breakout somewhere around 40.80 is right here, you're risking a very small amount. It goes up and goes sideways. You tighten your stop, and you can also at that point draw your fibs on that wave as well and get a very clear picture. A 5-minute bar might shoot up 40 pips and you don't even know where to put your exits at. So notice how the fib area worked here. It's so very strong that you get this nice little 2-wave pullback right here. You can go long when it breaks the trend line, or it goes a pip above that last green bar's high here. with a very, very tight stop, because anytime it's up statistically too much like it is today, it can definitely continue, but you also have higher risk. By using your 8 pip bar, you can add 2 pips or 3 pips padding to the bottom here and risk 10 pips with a really good chance of making 20 to 50 pips. In this case, you're long here at 45 and it went up 55, 60 pips. You know, you might, as it went sideways here, just get out near the whole number or put your stop underneath this low, but you're out of your trade. And if you're looking to do a counter trend trade, there's no better type of chart than a range bar, because you know, a lot of times when you do counter trend, you lose the first and second time before you catch, you know, 20 to 50 pip counter trend move. But in this case, with the range bar, if you went short right here, you had a nice 30 pip counter trend trade. It went up again. If you're afraid to buy it right here, that's fine. Wait for it to run out of steam and then go short. We have a new tool called the Fisher Transform, which I'll show you on a range bar right now. That's not what it'll be called in your study, but you can use this to give yourself a feel for when to go short. When they're green, don't go short. When you see the first red bar, like right here, at this point, it's safe to look for short. So, you know, it's kind of going up here. You have a false green signal, but, you know, at this point, you can go short. Just 8 measly pips off the high. You're risking 8 or 10 pips. You know, your stop's there. It's kind of going sideways, and then it starts to go down. You move your stop from, you know, which it's hard to even draw it above this bar's high, but your stop's a pip or 2 above the high here. When it kind of goes sideways right here, you move it down, and notice it stayed red, 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 red. Here's your first green bar. When you see that, you can tighten your stop, because this is such a strong currency, you can easily shoot up. And now you're already locked in 6 or 7 pips. It comes down again. You have another green bar right here. Move your stop down above that bar, and it has another green bar here. You move your stop above here. You're still, you know, in that trade. It could very well continue down because it's up statistically too much. But you've already locked in 10, 20, 25 pips. And what many people would consider an extremely risky trade, we can wait for, you know, in many cases this Fisher Transform tends to precede reversals by a bar or 2. It's actually, in many cases, a leading indicator. In some instances, it's 1 or 2 bars late after a switch, depending on the math behind how the swings occurred. But frequently after a big move, it's pretty accurate at finding reversal. This one, you know, gave you your warning to look for sells right here, and you could say I'm going to short the next bar if it goes a pip below the low, which it did. You know, if you initially had a stop above the high here, when it's kind of going down, notice it stayed red, so you just stay with it. You know, very decent 15 to 25 pip counter trend trade. You know, so I just wanted to give a brief review of what's to come. And with that, combined with our range charts, combined with our Fisher percentage, which measures which currencies are the most trending up and down using this ultra fast tool. If you get 80% or plus of currencies moving one way, like an hour ago the pound was the weakest and the CAD and the Swiss were the strongest. The pound CAD fell from 1045, which is when the signal happened. You can see it fell 100 pips. The pound Swiss also fell a tremendous amount at 1045 and after. The signal was generated at 1045 to sell. The next bar, it was actually 5 minutes early. The next bar you sold here are the lows, and this just fell 100, 200 and something pips. So you're going to be very excited to get that. If you don't have an account with us, open an account with one of our brokers so you can get our software for free.